So obviously you signed up and you are here to learn about commercial real estate and investing and just kind of a basic high level overview. So I appreciate all of you sharing your morning with me this morning. And a little bit about me. So I'm licensed on both sides of the river in Oregon and Washington. And I'm based in Vancouver. My office and where I live is in Vancouver. I'm investing in real estate myself since 2011, and I came into the industry about 6 years ago after 15 years in local government. And last year we leased or sold over 500,000 square feet in commercial real estate, about 36 million. And I want to say that's something like, I don't know, 10 football fields. I did the math before because, 500,000 square feet, even to me, doesn't really mean anything. But we had a great year last year, and we're on track to kind of finish strong this year too. So thank you for being here. That's just a little bit about me. So please understand that I am obviously not an attorney or a CPA, so I'm not providing legal or tax advice. And I am recording today's session so that I can post it on my YouTube channel and email it out to folks if they missed the class today. And you will also receive a recording of the video. So if you want to re-listen or there's something that you missed, I will get that out to you later today. So we're going to talk about different types of asset classes in commercial, what financing might look like, some challenges that folks might run into, and then we'll have some time for some Q&A at the end of our time together. So for those here on the video today, are you looking for a property that's an investment that you're just looking to generate income? Are you looking for a piece of property that you are going to occupy your business in as an owner occupied? Or are you looking for maybe to occupy something that you might have some more tenants in there? Or are you just looking at purchasing land and maybe you don't know, and that's also okay. But if you can put in the chat, and I guess maybe I should add E as an other, because there might be other reasons why you're on this call. If you wouldn't mind putting that in the chat, and then I just kind of know what the audience is and who's here and what you're hoping to learn out of today. So if you guys could do that in the chat, and if it is E, that's also okay. You can just put E in there that it's totally other and it's none of those things. Because I know that there's some folks in the industry here. And so cool. Thank you, Stephanie. That it would just be helpful. Okay. Thanks, Greg. And now that I am talking out loud, I think I'm going to add that E because now I know that there's other folks on here. So cool. Thanks, Amy. Appreciate it. All right. So we will keep moving on here. So there's different types of asset classes that one thing that people don't really understand is when we talk about commercial, there's lots of different things within the world of commercial real estate. Unlike residential real estate, when you think about that, it's basically just houses and maybe a duplex or something like that. But when we talk about commercial real estate, people come to me and they're like, well, I'm going to buy something. I'm like, well, you need to give me a little bit more specifics because there's a lot of classes within the commercial family. So we're going to talk about all of these a little bit more in depth and what they mean so that you have an understanding of the different types of asset classes that are out there in commercial. So the first one is multifamily. This is one of the hottest asset classes right now in the Portland metro area. And sometimes people get started looking at just 2 to 4 units. Residential agents, feel very comfortable oftentimes selling these. It's a duplex, triplex, or fourplex. And you can obtain residential financing. So typically you need 25% down on that. But you can work with a residential lender and a residential realtor to purchase or to sell a multifamily unit. And so when you are looking from a commercial perspective, though, that is anything more than 5 units, and that requires you to obtain a commercial loan. Even if you plan on living, let's say, in a 6-plex, you still, as an owner-occupied user, you're still going to need to get commercial financing. So office space, office buildings. So you can look at anything from, a multi-story, multi-tenant office space user type building. Again, either as something you're going to occupy or you just want tenants in there to generate income for you. Or you can maybe look at, single user, owner user type office where, you're going to operate your business out of. Maybe you might rent out a room or 2 in there as you're working on growing your business. But that also is considered a commercial property that you can, even if it's a house converted into a commercial property, still considered a commercial piece of property if it's zoned for that. Retail. So retail includes everything from a standalone building, like a standalone Starbucks, or some other type of just single retail space that you might be going into, to a multi-tenant, a strip mall, or something that might have more, a couple of built offices, or I'm sorry, a couple of retail shops in there. So different kind of classes there within the retail space. Another asset class is industrial, also a very, very hot commodity here in the Portland metro area, just with all the e-commerce. And as when COVID hit, everything moved online. And so we're still seeing a lot of activity in the industrial space. So that includes everything from a warehouse to flex space, where you might have an office with a warehouse. It includes everything from, small 1,500 square foot warehouse for a contractor that might have a few trucks to, a much, much larger e-commerce type space. So that is what we mean by when we're talking about industrial space. Also, there's hospitality. So that's everything from hotels, restaurants, resorts, golf courses, anything that kind of falls into that category. There are investors, and even business owners that look at that asset class and focus on that. I have a hotel buyer right now that's looking for something in the Pacific Northwest to sort of upgrade it and move it into, a new class of hotel use. So it just depends on, what you might be interested in for yourself or as an investor. Land. So oftentimes people come to me and say, well, Andy, oh my gosh, these buildings are so expensive. I want to buy some land and I want to build on it. And I said, well, you're going to be spending more money and more time doing that, which is okay. Some people, that's the person they want to go. When we talk about land, you can do everything from, an ag use, which we have a lot of here in the Northwest. You can look at buying something and building it either for yourself or as an investment, and then turning around and selling it. You can buy it and just hold it and have absolutely no plans to do anything with it. You're just going to hold on to it and hope that because it's a commercial piece of property, if it's in a good location, if you see growth happening around, that you can just buy and hold on to it. Or another option is I have had several clients that do partitions. So they buy a piece of property and then they go through the process with the city or the county to now break it off into smaller parcels, which you can charge a higher price per square foot to do that. So that is some people's business model. Maybe that's something that you would look at doing for yourself. Hey, I don't need all this acreage. I just need this little part. And so you're going to break off that piece and sell it for more money per square foot than what you originally bought all the land for. Another asset class that's very, very attractive across the country is RV boat storage and mini storage. So again, I've had clients that have built them and then looking to sell, or people that are just looking to buy and hold on to them. And if you're driving anywhere in the Northwest, certainly that people are very active in this. They seem to be popping up on every corner. I ask myself all the time how people have so much stuff, but neither here nor there. This is a very, very attractive class of real estate to hold or to build if that's something that you're interested in. Another class, I think, of commercial real estate that people are attracted to is manufactured home parks. If you're not familiar with them, the owner of the property owns all the land of which those manufactured homes are sitting on. And then those the owners that own the manufactured home don't own the land on which they reside. So they're paying a monthly rent or a lease fee to basically have their mobile home in that park. So again, you can look at building something and developing something, or buying and holding something that's already existing. So there's several different types of financing options that I'm going to talk a little bit about here that folks may or may not be familiar with. But again, it's different than when you're looking at buying a house where you're just looking at a conventional or FHA or maybe a veteran's loan. It's a little bit different on the commercial side. So I'll talk a little bit about what that all looks like. So I always recommend that if you're looking at any type of commercial loan, that you should speak to at least 3 to 5 lenders. When I started telling this to people, my business partner was really surprised because he's 35 years in the business. And he's like, I've never told my clients to do that. And I started telling people this based on my personal experience. I've made in the last 18 months 6 offers on commercial buildings to buy for myself as investments. And I started because I know a lot of lenders, I would reach out and, start the process with them. And, I would get different interest rates, because what the commercial lending industry doesn't tell people, it's kind of a little dirty secret, in my opinion, is that every quarter they're really looking at their portfolio. And so if they don't want that asset class in their portfolio this quarter, or they're trying to balance something out, they'll deny you as a borrower because they can set their own bank guidelines. So let's say, during COVID, a lot of banks were not taking on any hospitality risk for obvious reasons. And you as a borrower, you could have great credit, you could have a great down payment. And so I realized that from experience that I was also having lenders tell me crazy interest rates before they started going up now, because again, that was a way for them to deter me from wanting to pursue a loan with them, even though I was a good borrower, just because I didn't want the asset class that I was looking at buying in their portfolio. But again, they don't want to deny me the loan. They just want to make it untenable where I don't want the loan and I would go somewhere else. So I always just tell people, you have to talk to 3 to 5 lenders, and you might even need to go through the loan application process to compare the loans apples to apples. But I really encourage my clients to take a day and to spend the time to invest in doing that, because you could still talk to 3 to 5 lenders and find out that you're going to get denied for the loan, again, for various different reasons that have nothing to do with you as your borrower status and your ability to repay the loan. Every bank also has different programs and different lending options. They all sometimes there's one bank in town that just really only does owner occupied. They don't want to work with investors. So, understanding that, working with somebody that knows what those banks offer is important as well. And I can't reiterate enough, not all lenders are equal as they're rebalancing their portfolio and even their down requirement on the same piece of property. So it behooves you as the borrower to spend the time and energy, or maybe you might not do that on another type of loan. If you're just looking to buy a house, maybe a 0.25% on interest rate isn't that big of a deal for the time. I mean, it is over the time of the loan, but when it comes to commercial, it really matters to spend the time to figure that out. So one of the tools that we use in commercial real estate that's a little also different than residential is that sometimes, I don't want to say most of the time, sometimes a seller is willing to carry the note. And so they serve as the bank, and you are going to maybe pay a little bit of a premium for that, but you obviously can close quicker than having to go through the rigmarole of having to work with the commercial lender and going through that process. Typically, you are looking at a balloon payment, so they might be the bank for up to 5 years or something like that, and eventually they're going to want to get cashed out and have you, finance through a traditional bank. But it is a good way to sometimes close quicker, get the process going. Especially for a new business that maybe doesn't have a track record of operating, so that you can operate that business for 2, 3, 4, 5 years. And then you can go to the bank and be like, look how great my financials are. Now you should lend to me. So that's something else, a tool that we were using even before interest rates started going up. And we'll continue to have that ability to use this financing function. Unlike that, you don't see very much on the residential side of the business. So SBA loans, you are done through a bank where you as the borrower can put down as little as 10%. And you are required, though, the caveat is it's not an investor loan for a piece of property you don't occupy. You as the borrower are required to occupy 51% of the building. So yes, you can get in a little bit less expensive with 10% down, but you have to occupy it. You can't just say, well, I'm going to now just rent one room in it for my business and then have the rest of the building used by other businesses. So that's just the caveat with that. There are also SBA VA loans for veterans there are some banks that offer that program. And so that's, I always tell people about that. Again, not every bank offers that. So you have to take the time to find out if that is available. But I do want to go through, I'm actually applying for an SBA loan right now to buy an office building. And yesterday I was shocked that they quoted me a 10% interest rate. So SBA is not always a good deal because again, you got to do your homework, because now I might be looking at conventional financing. But again, you as the borrower have to do your due diligence. And I can never stress that enough with my clients. Another option that we have in commercial is hard money. So of course you're going to pay a higher interest rate, and they are going to want to have you turn that money pretty quickly. Maybe have you cash out that hard money lender within a couple of years. Or not, you as a borrower aren't going to want to hold on to it for a long time either, because you are paying not only more points, you're paying a higher interest rate. And especially with the interest rates the way that they are, you've got to really make sure that that building is going to cash flow for you to cover that higher expense. But again, you can close quicker and you don't have to kind of do the rigmarole that you might with a traditional bank. So again, it's just another option, another tool in the toolbox that sometimes is needed to bridge short gaps. So lots of questions that you as a borrower should be talking to lenders about. Everything from, what your down payment is going to be to the interest rate. How long are they going to amortize the loan? Are they going to do that over 15 or 30 years? All of these things are going to impact what the loan looks like. How long is it going to be? Is it a 5-year note, a 7-year note, a 10-year note that's then amortized over 30 years? And then when that note comes due, are you just getting an interest rate readjustment, or are you having to go through the whole refinancing process? And these are questions that are important for a borrower to know, because you can sign all the legal documents and then not really understand what you're getting yourself into, because again, it's very different than a commercial or a residential loan where you're getting a loan for 15 or 30 years to buy a house, and then unless you have an ARM and adjustable rate mortgage, you're pretty much paying the same every year, except for an increase in taxes if you have those escrowed. So anyway, you just want to make sure you understand what you're signing. What are those penalties? If, let's say, you have an inheritance and you're able to pay off the building, is there any prepayment penalty? You just need to understand what you're signing. So these are some questions that, again, comparing apples to apples when you're talking to lenders, that you can ask and try and inform yourself. So people often ask, like, they don't know where to get started. It's kind of overwhelming. And so there's 3 things that I think are really important that you need on your team: is a commercial broker, just somebody to help you guide you through the process, that can help you run numbers. Is this a good investment? Does it make sense for your business or as an investment, if that's just what you're doing with it? Talking to those banks, having those people that you can call to make sure that you can get a loan on what you're looking to do, and understanding where your money is going to come from, unless you're paying cash, of course. And then a commercial contractor. So oftentimes, you might buy something that needs work. Maybe it's not going to suit your use, where the walls are, or you just need to make it work for you or for a tenant that you're trying to put in there. So, making sure that you have a commercial contractor that can do all that work is important as well. And whether you're, no matter what you're doing, whether you're looking to invest in real estate or other assets, I just tell people, you got to start taking action. You're not going to learn until you start the process, right? This is my first SBA loan that I'm looking at getting, right? I didn't know until yesterday that interest rates on an SBA loan were 10%. So you got to start taking action to learn as you're going, because this is a business that you can learn as an investor as you keep going. I mean, I still, I look back when I first started real estate investing and the mistakes that I made, but I only knew them, made the mistakes because I was doing something. So that's really important, and I can't stress that enough. So what are some challenges that investors find when they start getting into commercial real estate? Well, obviously, if you have poor credit, you're really going to have a tough time finding any lender that's going to want to lend to you. And then another item is investing in rural areas. So let's say you're just like, well, I really can't afford to invest in an investment not owner occupied in a metro area. I'm going to look at doing something farther out. And you just got to be careful that I had some clients, and it's only from experience, that we're looking at investing in rural Clark County. And we ended up going to a commercial loan broker because we couldn't even find I sent them 10 different banks, and everybody kept telling me they would lend on them. And then just a variety of reasons why I couldn't find a local lender for them. So we ended up finding a credit union in the Midwest that would lend on the 5-plex they were trying to buy. So I've learned rural areas can be really tough, and you might have to work outside of lending institutions in your local market. And then lastly, really understanding the return on investment of what you're buying, whether it's for your business, does it make sense? Or if you're just looking to invest in the property, nobody ever wants to overbuy. And the reason why it's important to work with a commercial broker is a lot of times people are like, well, Andy, just send me comps. And we don't run commercial values based on comparables. There's lots of ways to calculate pricing on a commercial piece of property. And it's not just by looking at the equivalent of a Zillow or LoopNet to tell you what the value of a property is. So you want to make sure you understand it, and that you're working with somebody that can help you understand it and learn it about how to calculate whether a property is priced right, because just like anything else, not everything is always priced as it should be. So other things that you should be aware of is the purchase timing. So if you are looking at owner occupying something, and let's say your lease, I'll just talk about myself. Our lease is up in March. And so we're trying to find a building to get into to then do some rehab so that we can, terminate our lease. So just making sure that you understand everything takes longer than it should. And when it comes down to going through the process, a traditional commercial process could take 90 days from when you get under contract till you actually close. And then again, if you have to do work on the building, and everything takes longer than you think it should, just making sure you're giving yourself enough time if you plan to occupy it. Obviously, as an investment, that could be a different situation and you maybe have more time, but time is money. And so you just want to make sure that you know what your timing is. And then obviously making sure that the property you're buying is actually allowed for the use of what either you're going to operate as an owner user or as an investor, that maybe the tenants you have in there are also operating under the right use, because going through zoning changes and conditional use permits and different government processes, and I can speak from experience, takes a lot of time. And so you just want to make sure that, time is money. If you're paying to go through due diligence, or you're paying, you put down non-refundable earnest money, you just want to make sure that the process is going to work out in the way that you hope it does. So again, in the chat, if you could just put what letter you might be interested in purchasing a commercial property. And again, I probably should add a last letter that says E, none of the above. But if you can just put in here what you're looking at, that would be helpful. Thanks, Mel. Multifamily. I know that there's more folks out there. Let's see, Clifton said income producing property. So obviously that could be any of these categories, as long as you make sure the numbers work and are cash flowing. So let's see, I guess maybe, I'm not sure, but okay, Stephanie, retail, thank you. I appreciate kind of just some feedback, just because I know I'm throwing a lot of information at you. Thanks, Micah. So multifamily, okay. Thank you. I appreciate the feedback here. So common questions that I often talk to my clients about is, everybody analyzes property a little bit differently. These are some things that can come up in a conversation. So just as a potential investor and a buyer, some things to think about. What's important to you? Is it how fast your cash on cash return is going to be? Are you looking at, fixing up the property to increase the lease rates as those tenants are moving out? Are you looking at just fixing it and then flipping it and getting off your portfolio, and you're doing the value add that way versus, holding on to it after you've increased the value? A lot of people want to come and talk to me about like the cap rate, and they're trying to find these ridiculous cap rates that don't exist. Again, in a lot of asset classes, the market's been really, really strong here. And so, what is your trigger point in terms of what you're figuring out of whether a property is of value to you? And then, doing the numbers, like, okay, does it make sense? I just signed a 7-year lease for a client. When I did the math, their total life of that lease, their payment was going to be $900,000. Well, they're a new business. They don't have that. They're not credit worthy with their new business right now. So they don't have that cash on hand to go and buy a building for their business. So they're now, having a 7-year lease. So you just have to do those evaluations. Yeah, would they love to buy a building? Yes. Can they at this exact moment in the stage of their business? No. So they are leasing, but they recognize the value that in the future they do need to look at purchasing something. So, as a business owner, if that's what you're looking at, owner occupied, you need to figure that out. So people always want to ask me, should I talk to you even though I have plans, but I don't actually have any money? And I'm always happy to have a conversation with folks about just how to get started, or point them in the right direction. If they don't have great credit, okay, you need to go talk to somebody in the credit world, just to point people in the right direction. I'm always happy to have a conversation, even though you might be planning for the future. So also thinking about whether you want to self-manage and you want to deal with the tenants, whether they're multifamily tenants or retail tenants, business owners. What does that look like for you? So you want to kind of have that question in your mind. Are you going to manage it? Are you going to hire somebody? And then do you want an easy investment where maybe you've got long-term tenants that are under market value, and so a lower return, but it's less work? Or do you want a higher return on your investment where, maybe the place does need repairs, and so you're going to get involved in, permits and drawings and dealing with contractors and going through all that. So that's also a question to ask, like, do you want something more plug and play, or are you willing to take on a little bit more work? So when you're trying to think like, where do I get started? I don't know what to do. This is a lot of information. So first off, you want to think about what kind of asset class do you want to own? Like, do you, are multifamily, is that the way to go, where you just, want some residential tenants? Or are you thinking, yeah, having that retail is going to be of interest to me? So thinking that through, and then figuring out what your budget is, looking at your assets, trying to figure out how much cash, what approach, am I going to occupy it? Where maybe I can put some less down, or am I going to as an investor, I need to come up with, anywhere from 20 to 40% down. Those are things to think about. Put together that team, excuse me, and then take action. To me, I'm all about taking action. You can learn all you want, read all the books, webinars, podcasts, and all that. But at the end of the day, nothing's going to happen unless you decide to take action and do it. So I always encourage that. I'm happy to have a call with you or meet up for coffee if you're in the area, just to talk about the industry and what you're looking to do. And with that, I'll conclude and take some questions. If you have any questions, if you don't have any questions, feel free to bop off the webinar this morning. I appreciate your time and spending the morning with me and learning a little bit something new. But I will stay on here and answer any questions that anybody might have.